I feel extremely constructive towards the gold price, longer term towards the silver price. The consequence of that is I feel extremely constructive towards a carefully selected package of precious metals equities. Now, I will say that the universe for gold and silver equity investors is small, much smaller than it used to be. It deserves to be small because the industry as an industry has underperformed. If
Yeah.
you take back to the decade 2000 to 2010, the gold price increased from what, $250 to 1700, and the
Yeah.
free cash flow per share of the XAU declined.
That doesn't make any sense.
It takes real skill to screw up a market where the selling price of your commodity goes up sevenfold, but the industry managed to do that.
Between 2020 and 2024, central banks accumulated an estimated 106 million ounces of gold, more than offsetting Western investors' liquidation. Consequently, despite the sharp rise in interest rates, gold has nearly doubled. Unfortunately for gold mining executives, central banks are interested in gold bars, not shares. The underperformance of gold mining stocks relative to the underlying metal has created an incredible opportunity. Some of the most well-known contrarian investors are taking note. Stanley Druckenmiller, for example, made headlines when he sold off extensive tech stocks like Alphabet and Amazon in late 2023 and started buying into gold miners like Newmont and Barrick. Prominent market expert RickRule states the shrinking gold and silver equity investor base is due to past mismanagement. Despite short-term fluctuations, he highlights gold's significant rise from $253 to over $2,500 in 2 decades. The asset of the new millennium has been gold, delivering a real return of 6.8% per year since the end of 1999, despite being a shiny rock that generates no earnings and pays no dividends. So far, the S&P 500 has averaged total returns of 4.9% over this stretch. Remarkably, in a testament to how poorly managed miners have been through boom-bust cycles, the companies that can sell gold to generate earnings and pay a dividend are far trailing the S&P 500 over this same period. Notably, RickRule mentions standout performers like Wheaton Precious Metals and Agnico Eagle, with 50 to 60% gains. In contrast, he criticizes companies that missed opportunities during gold's 2000 to 2010 surge. While 2024 has been a challenging year in many ways, Barrick's Q3 performance arrows point in the right direction, and the company believes a foundation has been laid for a solid fourth quarter, which should enable it to end the year at the lower end of its group gold and copper production guidance range. Now, we present the clips of RickRule's insights from his recent interview. Before we continue to discuss this, please subscribe to our channel and activate the bell icon for timely updates.
You know what amuses me, Ivan, to see all the online hand-wringing about the recent decline in the gold price and the silver price.
Right.
One needs to ask oneself in the last 12 months, is the gold price up $600 or down $200? Um,
It's up.
I guess because I'm so old and I've seen this so many more times than other people. Day-to-day moves, week-to-week moves in the gold price and the silver price don't matter to me a bit. They're absolutely positively irrelevant. I think once on your show, I don't know if you remember this, but we were responding to some of your listeners' comments, and somebody was saying, when is the gold price going to move? And I said, well, I guess it's going to move in the year 2000. Since 2000, it's gone from $253 to 25, 26, 27.
Right.
People are very, very, very odd. They often invest in long-term narratives, and then they employ short-term tactics.
Right.
If you're investing in a 3 to 5 year scenario and you have trouble holding a metal or a stock over a long weekend, it's likely that it's not going to have a happy ending for you. I feel extremely constructive towards the gold price, longer term towards the silver price. The consequence of that is I feel extremely constructive towards a carefully selected package of precious metals equities. It's tough to be more bullish than I am.
Right.
But I guess that 71 years on Earth has given me a perspective, oddly, that's longer than the perspectives of people who have more time left. When people say that the gold and silver stocks haven't moved, I'm sort of wondering what it was they owned. Newmont hasn't moved. Well, actually, Newmont did move. It just moved back down. But they forgot to perform. Barrick hasn't moved. They forgot to perform. The companies that have performed have had sterling moves, even the exploration companies. Surprise, surprise. If you want your stock to go up and you're an exploration company, it really helps to have a good drill hole.
That's true.
Really helps to have a discovery. So I'm a little baffled. Now, I will say that the universe for gold and silver equity investors is small,
Yeah.
much smaller than it used to be. It deserves to be small because the industry as an industry has underperformed.
Right.
We've talked about this before, Ivan, but if
Yeah.
you take back to the decade 2000 to 2010, the gold price increased from what, $250 to 1700, and
Yeah.
the free cash flow per share of the XAU declined.
That doesn't make any sense.
It takes real skill to screw up a market where the selling price of your commodity goes up sevenfold, but the industry managed to do that. The good news is, I think, twofold. One is that the management teams who caused that to occur were uniformly allowed to pursue other employment opportunities. And two, the institutional investors that are still left are keeping the managers on a much tighter leash. And I don't think that you're going to see, at least for the next 3 or 4 years, the type of wasteful expenditure that occurred then.
According to a recent Bank of America study, 71% of U.S. financial advisors have little to no gold allocation, often representing less than 1% of their portfolios. However, that narrative is changing. With the Fed's rate cuts finally materializing, investors are returning to gold-backed ETFs again. Regarding junior mining companies, RickRule stresses the importance of experienced leadership, advising investors to focus on CEOs with relevant success and strong boards. For senior producers, he highlights sustainability through metrics like net present value and recycle ratios, ensuring reserves are replaced efficiently. Investing early in the development cycle of the right gold junior, one with an excellent project in a safe jurisdiction led by experienced management with the ability to raise money, can reap huge rewards. 5, 10, or even 20 times your money isn't uncommon. Let's get back to the interview.
With the juniors, you look at the people. Beginning investors make the mistake of thinking that exploration is an asset-intensive business. It's not. 1 in 3,000 mineralized anomalies become a mine. Believe me, it's not about the asset. It's about the scientist. It's all about the scientist. So look for a serially successful CEO and look for a CEO that has experience that's related to the task at hand.
Right.
If somebody succeeded in some phase of mining that isn't the one that they're currently employed in, their past success is probably less relevant. Look,
Right.
too, at how they chose their board of directors and the experience that they have in senior management. In the juniors, it's all about people. In the seniors, it's different. It's about the relationship between net present value and remainder value and long-lived reserves versus enterprise value. It's about having a balance sheet and an income statement that are sustainable.
These are for
And for
producers?
companies, I'm sorry?
These are for producers?
Yes.
Okay.
And for companies that have been producers of long duration, the Franco-Nevadas of the world, the Agnico Eagles of the world, you have to look at something called recycle ratio. Recycle ratio measures the amount of new net present value in reserves and resources that are added relative to a unit of production existing production. Meaning, if Agnico Eagle sells an ounce of gold, what's their margin on that ounce of gold? And historically, how much by way of reserves can they add by reinvesting that money? Is the business sustainable?
So any changes in the gold price, up or down, significantly impact their profit margins, and they tend to see the gold shares make more significant moves than the price of the underlying metal. What key factors should investors consider when capitalizing on the current opportunity in gold and silver mining stocks? Drop your thoughts in the comment section below. If you find this video informative, don't forget to support our channel and turn on notifications to stay informed about our latest videos. See you in the following video.